Ladies and gentlemen, good day and welcome to Caplin Point Laboratories Limited Q2FY25 earning conference call hosted by Dolat Capital. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Candice from Dolat Capital. Thank you, and over to you, ma'am.
Thank you, Nikita. Good evening, everyone. I, Candice Pereira, on behalf of Dolat Capital, welcome you all to the Q2 FY25 earnings call of Caplin Point Laboratories. I would like to thank the management of Caplin Point for giving us this opportunity to host the call. Today, from the management team, we have with us Mr. C.C. Parthiban, Chairman, Mr. Vivek Parthiban, Chief Operating Officer, Mr. D. Muralidharan, CFO, Dr. Sridhar Ganesan, Managing Director, and Mr. M. Satyanarayanan, Deputy CFO. I will now hand over the call to the management for their opening remarks. Over to you, sir.
Thank you, Candice. Thank you, everyone. Good afternoon and welcome to our earnings call to discuss the results of Q2 and H1 2025. Please note that a copy of all our disclosures are available on the investor section of our website as well as on the stock exchanges. Do know that anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. The conference call is being recorded and the transcript along with the audio will be made available on the company's website as well as the exchanges. Please note that the audio in conference call is copyright material of Caplin Point and cannot be copied, rebroadcasted or attributed in press or media without specific written consent of the company. I would like to now hand over the floor to our chairman for his opening remarks.
Thank you. Good evening, ladies and gentlemen. Welcome you all to our investors call. You are aware of the results of our H1, and my colleagues will talk on the project, operation, numbers, and also the current business of South and North America. Let me emphasize on some of the new areas that we consider as real value addition for our company's sustainability and scalability. First, let me give you the quote of Malcolm Gladwell. He has populated the concept of 10,000-hour rule to become an extraordinary company in any field. We are confident that our hope creates the force to become the force multiplier in the years to come. Now, the new areas of value addition. First one is onco-OSD. We have already identified 2 niche onco products for these studies with the hospital patients, not with the healthy volunteers. Most of the companies of our size go for the healthy volunteer studies, which is not that expensive. At the same time, it's also competitive in the market. The free hospitals that we will complete in the next 3 to 4 months' time will be used for these study with the patient volunteers. This will be accurate and also cheaper too. We also plans to go for patented products where the patent expires in 2 to 3 years from now. The advantage will be that we will be one of the very few companies in the markets too. Number 2, peptides. You are aware that some of the peptides are ruling the US and the other regulated markets. Now we are also developing the peptides which are used for obesity and diabetes. These peptide injectables and tablets are for regulated and ROW markets. Number 3, insulin. Recently, our COO visited China, and we are in the process of signing an agreement with a leading Chinese company that not only manufactures the drug substance but also the formulation. This will be imported and we will manufacture in our Caplin sterile. Once the DMF is ready, that the Chinese company will give a DMF and will supply the drug substance, and we will go for scale up and exhibit in our current facility. And also, we will conduct most part of our clinical studies using our USFDA approved CRO and our free hospital. Number 3, biosimilars. There are few mid-sized companies in China manufacturing and marketing biosimilars in Chinese market. Now that we also renewed our relationship with our erstwhile partner Giant-Town, which is the major distributor for many big and small companies in China. They cater to 18,000 hospitals in China. They also gave us a list of couple of companies, and our CEO met one such company in his recent visit. And we initiated the discussion for a partnership with this biosimilar company. And our erstwhile partner, with whom we renewed the relationship, we are also interested in this type of joint venture opportunities for regulated and ROW markets. The 4th one is NCE-1. Nowadays, the Chinese companies are increasingly becoming stronger in NCE-1 areas, which is nothing but challenging the patent with a change in process. And we also met a couple of people who are interested in these type of things, but we are still in the nascent stage, and the discussions are on. And here, these networking opportunities are mainly due to 2 factors. A, we have been running our office in China for the last 18 years. B, as I told you before, we reconnected with our erstwhile partner Giant-Town, who is the 2nd biggest distributor in this country. The access actually to these companies becomes easy for them because they distribute most of these medicines actually in the Chinese market. They also told us there are companies who don't have the wherewithal to export their products, hence they need partners, especially from India. The 6th one is specialty chemical. Giant-Town is also interested in identifying one particular specialty chemical which is of huge volume in China itself. He has also connected us to a private R&D promoter who worked as an R&D head in China for 12 years in a multinational company. Now he has created his own private R&D in India. He has the exposure of developing this chemical in the past. We are working on a tripartite partnership model for this chemical. The 7th one is the medical devices and the hospital products. We found some niche products, mainly the medical devices, mainly in China and India, and these products can be taken to our warehouses in US, and it can be supplied actually to the hospital after we do actually some market study about these products and prices and the sale. The 8th one is the intermediates in China, that is with Giant-Town facilities. The same can be manufactured in the form of intermediate actually in these Giant-Town facilities of China, and we will do the API, especially in the factories where we are going to complete in Vizag and Peruvai Kandigai, and this will be used for our general and oncology injectables for captive consumption. The 9th one is the software development, which we have already discussed with you earlier. We already mentioned about this software development. It will not only be used in our own factories, this can also introduce this we will also introduce this software in factories where they don't have this option, and we will also outsource some of the products from this type of factories in the form of a counter trade. And Giant-Town will also help us actually to identify this type of factories. Finally, we are also looking for more and more private R&D companies in addition to our own R&D for complex and specialty products. What I conveyed to you are all long-term projects with a horizon of 3 to 5 years. We are confident of doing many of them as our cash flow is comfortable. Thank you. Thank you very much. Now that I will pass it over to the COO.
Thank you, Chairman. So I will touch upon a little bit on our Latin America, US, and our recent entry, which we call as our second innings into China. So obviously, our Latin American business, predominantly the Central American markets, where we've been operating for nearly 2 decades, continues to drive robust growth and cash flows for us. Now, as we enter into the slightly larger markets, we will need to be converting many of our current dossiers into CTD format dossiers, and that's a step that we've been working on, and we're confident in the next 6 to 9 months the entire process will be completed. What has been driving some of this growth in the existing markets itself would be introduction of new and more innovative products in markets where we already have established an excellent platform. Some of these would be pre-filled syringe products where the existing product is in either a vampule or a vial. Introducing a pharmaceutical soft gel in a space where the existing product is either a regular capsule or a tablet. So these are all areas in which we are directly launching our products in branded generic segment where the margins are also high and the viability lives for a longer duration. And the next target for us, obviously in Latin America, is entering into the larger markets of LATAM, specifically Mexico, Chile, and Brazil are the long-term targets that we've taken on as a company. When it comes to Mexico, we're happy to announce that we've filed close to 23 products right now. And it's a combination of many products that are from internal pipeline and also many that we have outsourced from other companies, specifically China. In addition to that, we have also filed our first dossier in Brazil within a couple of months of passing the ANVISA inspection. We are comfortable that our latest partner in Brazil is the right fit for us because this is a company that is also into injectables. But the complementaries are that they are into large volume injectables, whereas we are into small volume, and we know them quite well on a personal level. They are one of the top 5, top 6 companies out of Brazil. So we are positive on this partnership. So the second one I would like to touch upon is our US business. The current B2B business that's been continuing well for us is slowly going to be transformed into more of a B2C. We have already set up we've already set up partnerships with 3 of the biggest wholesalers in the US because almost 80-90% of the volumes are moved from these. The second one is we have license over pretty much all the states over there as well. We have already set up our third-party logistics warehouse from where the first product has also been shipped out. Obviously, we need to be a little bit patient here because as we aim to work predominantly outside of the big GPOs and IDNs, there will be some amount of slow progress in the beginning, but once we start establishing direct connections with the hospitals, with the clinicians, pharmacies, etc., we feel that this is going to be very much a more sustainable and where pricing can be firm, the forecast can be much more firm, and we are much more in control of our own destiny over there. The B2B business continues to grow well. As we have expanded our capacities through phase 2, we will also be approaching our existing and new partners for some more progress in this field as well. We have launched 5 out of the 5 approved ophthalmic products in the last quarter. So that has also been helping in driving a little bit of our top and bottom line from Caplin Steriles. Our first ready-to-use injectable bag product will be launched in January. This is a segment where there's much lesser competition compared to regular vials. Our pre-filled syringe line from this facility, Caplin Steriles, is also close to being qualified, and we have a lineup of about 6 or 7 products that we'll be doing exhibit batches for in the coming few weeks. There is also a high level of automation that has already been achieved at the plant. Our LIMS system, our SAP system, our document management systems have all been electronically managed for a couple of years now, which obviously aids in our good compliance record. But we are now adding to it, augmenting it as much as possible by way of moving towards electronic logbooks and also eventually electronic batch manufacturing and packing records, where we can say that we are truly going towards a paperless journey. This will significantly help us in our already good compliance record. Finally, let me very briefly touch upon some of the things that we are aiming towards our second innings in China, because Chairman spoke about most of them. We have already tied up with one large and one mid-sized company with regards to entry into biosimilars and biotechnology products for us. We are going to be focusing on insulin and first and second generation monoclonal antibody products to begin with. In the first stage, we are going to be targeting specifically the markets where we are already present in, because the platform is already set over there, and we feel very confident that the uptake would be welcome. But the overall overall aim for us would be aiming towards the larger markets of Latin America and eventually the US as well, as we move from being a generic only product company to the next level of growth, which is into biologics. So when you combine our entry into the larger markets of LATAM, our own label in the US, and our entry into oncology space, and also backward integrated with our own API, many of these are exciting growth segments for us. We will have to be patient, like I said before, over the next, I would say 18 to 24 months, where it's going to be a stabilization and an evolution period for us. But post that, I think the company is really embarking on an exciting phase of growth. Thank you, and I request CFO to throw some light on financials before we open up for questions.
Yeah, thank you, Mr. Vin. Am I audible?
Yes, sir, you're audible.
Yes, yeah.
Good evening, everyone who have taken time off to join this investors call. Welcome once again. This is Muralidharan. The last investors call is started by saying what is well beginning of them. Okay, now that half the year is over, we have been able to sustain the growth momentum. As against 15.1% growth in the Q1 versus Q1 of last year, the Q2 has grown 17.8% with the corresponding previous year. Overall, giving an average 17.1% growth in terms of revenue in the current H1. So we are well poised, and then what is sustained is scalable, and I think we will be scaling it up further. So this is as far as the performance is concerned. The performance of the revenue has grown by 137 crores, and people normally ask what is the contribution from the parent or core business and what is the contribution of PS, whether it is distorted or one-sided. Everybody has come into party. The core business has grown by 13%. New entity, which is the Onco Lab, which is just commenced production in March 15, has also contributed sizably into the turnover. We have just begun with a well modest 12 crores, and this year we are hopeful of turning positive. The full year of operations will become PAT positive in this good news from the Caplin One Lab, and CSL has grown 40% H1 to H1, though albeit on a lower base. And all the parameters, whatever we have been talking about, sustaining 55% gross margin, EBITDA 35%, PAT 25%, all of this would be humble enough to say that we have exceeded or sustained the percentages what we have claimed. And the cash accrual, where we lay emphasis, our chairman lays emphasis because that is our strength. We have been able to accumulate 180 crores in the first 7 months, and of which 50 crores has been spent on the capex. 56 crores has been spent on the capex, and 123 crores is the accrual from last year cash balance, this year half cash balance. 916 crores what we had in the end of March has come to 1,039 crores during September 30th, 2024, and all the entities have been making profits and well set for scalable and sustained and scalable growth, and the expenses are under control. Though the quantum may appear to be on a higher side, but in terms of percentage and the contributions made by each of the businesses, these are investments for future, because our R&D expenses also been going up consistently. As a percentage, we are retaining about 4.5% to 5% of the expenditure, the revenue as R&D expenditure on an increased scale of business. So this is it from me, and if there are any questions on the financials, we'll be more than glad to clarify.
Thank you, sir. We can open up the floor for questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tushar from Motilal Oswal Financial Service. Please go ahead.
Yeah, thanks for the opportunity. Sir, first, broadly on this China association, more so the way the kind of regulations that are coming from the US government side. First of all, have we seen any resistance for the existing association with the Chinese, let's say, suppliers? And subsequently, strategically, as we are increasing this association for other portfolio, do you see that this as a risk to supply the products in the regulated market, particularly US?
Yeah. Can I answer to your question, please?
Sure.
Hello?
Yeah. Yes, please go ahead.
There are two ways to look at it. Sometimes like one of the Western economists said, China is a country which you can de-risk but not decouple. He said, now, and what we are planning to do or trying to do is, as I told you before, most of the places we will buy actually the API or drug substance or something in the form of actually semi-finished. I'll do the final actually activity in India, which means the product will be exported as an Indian product. And when we buy the product API or whatever it is from China, we won't go for a company which is not of that standard. Today we are in a position to actually identify companies A, as I told you before, we have been there for the last 18 years. B, the company which I told you joint is considered as the number 2 distributor of that country. So we are in the right hands. These are people who have a reputation, who are quality conscious. But I do agree with you. There is some propaganda mission which also, sometimes it happens to any country for that matter. But what is important actually is the business model, and then is it technically feasible and economically viable. That's what I feel that is important actually while looking at an opportunity.
Got you, sir. But this is more like a political, so from that angle, I just...
That is better not to be controversial. We don't want to use anywhere in the form of political. Thank you very much.
Thank you, sir. Thank you. And lastly, just the Caplin sterile revenue, if you could, maybe I missed if it was called out in the opening remarks.
Sorry, Tushar, what was the question?
Caplin sterile revenue for the quarter?
Yeah. Satya or CFO, can you please take that?
Hi, good afternoon. The revenues of Caplin Sterile for the September quarter is 92.42 crores of operating revenue.
Okay. And are we sharing the EBITDA PAT for this entity?
The PAT for this entity for the quarter is 12.63 crores.
All right. Thank you very much.
Thank you very much.
Thank you. The next question is from the line of Aman Soni from Invest Analytics Advisors LLP. Please go ahead.
Hello, am I audible?
Yes.
Please.
Good evening, sir. Congrats for a good set of numbers. Like 3 quarters ago, I asked the same questions on delays happening on CapEx plans. So at that time, you mentioned, say about oncology API is delayed on account of some addition happened on land acquisition at Kandigai. So, but if I compare the same timelines given at that time with the timelines as of today, there is still that timeline gap is increased by 2 quarters. Same thing happens in other projects like OSD facility. So my question is whether is it due to any regulatory problems that we are facing, or any anticipation of poor demand outlook, or at execution level only we are facing any lack of capabilities or any other hindrances? So kindly put some color on that, sir.
Yeah, let me take this question. See, there is nothing in the form of actually regulatory issues, because you see, regulatory issue starts only after you complete your USFDA inspection or no approval or any other regulated market approval. This is actually a new facility where we have already commenced the commercial production of tablet and capsule. We also got orders. We are in the process of exporting it. This year itself, as our CFO said, we'll go for the break-even. That is for sure. And it's also true it is delayed. But anything that gets delayed, it's not that the opportunity is denied. There are, like when we are going for 4 or 5 projects at a time, it is bound to happen. I hope you would agree with me. What is important here is not that we don't have any opportunity in the market, but at the same time, the priorities. Sometimes when you have too many priorities, organizing and executing the priority becomes the first priority. Like that, the first priority is to complete this onco project. Now the tablet capsule, as I told you, is commenced the commercial production. Injectable will start somewhere by April or May. Then side by side, we also are working on API Vizag plant. It's likely to commence the commercial production by April or May. And then we have already started identifying actually a consultant by name Qualitas who have worked in Gland Pharma. That's a company which you know very well. They worked there for 18-20 years and started this consultancy company. Their exposure to project and operation is really good. They are assisting us and it's going to go actually on a faster scale.
So I will just add in supplement to that, just a couple of clarification points. Right? While we acknowledge that there is delays in the API project, please note that these API projects are not for APIs to be sold outside. These are for captive use. So when we don't have our own API, it means that we are going to be buying API from outside. So the opportunities that we have in onco or anything else is not actually being denied. It says being delayed. In fact, sometimes it works in our favor also this way, because in generic space, what happens is what was the market last year will no longer be the market next year. So those times we actually have some information ahead of time that we can deprioritize those projects when it comes to API. So it's important to understand that what is going to be priority and what's going to be driving growth for the company is being taken care of first, which is our expansion in Caplin steroids, our expansion to onco OSD projects and stuff. But we are nearing completion for sure.
Understood, sir. I was just asking from the I agree we are using internal funds for these projects. That's fine, but still the money that is getting stuck or the delays that are happening, if they are completed on time, that will add value to the shareholders only. That is fine. Secondly, sir, from the US side, someone earlier asked about the resistance from the US. So are you witnessing any near-term headwind on account of this?
No, I think when it comes to US, if you've seen from our numbers, we're actually growing quite well. And this is also despite the fact that all of our partners know that we are coming out with our own label in the US. And to be honest with you, when it comes to specifically China and any question around that, we do not have too much of an exposure. In fact, we have very little exposure to the US from China, right? Because all of the products, 100% of the products are manufactured in-house. And to my knowledge, less than 20% of the APIs that we use in our ANDAs have Chinese source. And all the fast-moving products, we are qualifying a second source, which is not from the same country. So we're doing multiple steps. But honest truth is, have we faced significant headwinds because of the fact that the source of an API is from China? No, to be honest.
That's good, sir. And lastly, on your partnership with Chinese companies for biologics and biosimilars. So how does this Caplin Point plan to leverage its existing distribution network in LATAM for these products? And are there any specific partnerships or any kind of agreements with distribution in place for Brazil and Mexico also?
These are products initially will start with ROW market, and then slowly we'll graduate to various markets in Latin America and then move to North America. No? That will take action. This one, as you know well, these are all for long term. There are few things in the form of actually, getting into ROW market is more of a short to medium time. But the rest of it, insulin, biosimilar, NC-1 and all, it takes time. But when you start, if you start now, see, it's like actually, 10,000 hour rule. We'll have to go by that one. It takes time. At the end of the day, you make it also. That's how you become a force to reckon with.
Understood, sir. That's it from my side. I'll join back with you. Thank you.
Thank you.
Thank you. The next question is from the line of Rishabh Shah from Bugle Rock PMS. Please go ahead. Your lines are unmute. Please go ahead, sir. As there is no response from the participant line, we will move to the next question. The next question is from the line of Aditya Pal from MSA Capital Partners. Please go ahead.
Hello, thank you so much for the opportunity. Congratulations on the great set of numbers. So quickly want to get a hold on what would be the gross margin of Caplin Sterile, and I didn't get the number of EBITDA. If you can just call that out again for me, that would be super helpful.
Okay,
Yeah. Hi, thanks for the question. The gross margin for Caplin Sterile for September quarter is around 37%, and the EBITDA for the quarter is 29.27 crores.
And is there any particular reason that the gross margin of 37 that it decreased so much? Is it because that we invested a lot in R&D and new products?
And sorry, my apologies, sir. The COGS is 37% and the gross margin is 63%.
Understood. That's it from my side. Thank you so much.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Ketan Chedda from Retail Investor. Please go ahead.
Hi. Thank you for the opportunity. If you could just throw some light on the employee expenses. This quarter, it seems it's been higher when I compare the Q2FY25 numbers with Q2FY24 numbers. So if you could just explain, what is contributing to this 26% increase?
Yes. Basically, we have a ESOP scheme where the employees, deserving employees are rewarded with the management, and the grantees that the employees are granted the face value, which is hardly 2 rupees, and then the ESOP amortization happens on the market price as on the date of grant. Okay, this itself has consumed more than 3 crores, 2.8 crores to be precise. That is an additional expense that happened granted 200 crores and close to 200 crores in shares in the current year. So that's the reason this welfare measure or the retention tool or rewarding tool, whatever may you call, this is a major contribution to this. Apart from that, normal increment to the employees, the on-roll employees, the average of 10-12% is what has contributed to this.
Okay. And could you also throw some light on the other operating expenses, because they also seem to be inching a bit higher as against the growth in the sales numbers? If it could help explain that.
Yeah, as I mentioned in the opening remarks also, our R&D expenses have grown. So grown significantly by more than 8-9 crores. And then if you are following our company, last year September we decided that we will move our shipments to our subsidiary from FOB to CIF. The import terms change, meaning that the freight charges are borne by the parent company. Because while the subsidiaries are varying, has been borne by 13 to 14 crores is what we have seen. These are the 2 components, and then as we are upgrading our facilities, the repair and maintenance of buildings, machineries have gone up, and these are basically the reasons. And one ANDA we have filed in the current year, which is current quarter higher than the last quarter, and also the US entity which is going to bear fruit in the near future, we have spent close to 4 crores. The establishment, the employee cost, the license fees, all those things as is accounting for 4 crores. These are in general the numbers which account for the major increase in the expenses. As I said in the beginning, these are investments what we are doing today.
Sure,
Be it
sure.
ESOP, be it R&D, be it ES, all these are investments.
Sure. And if you could just give me a count on the total employee strength from March 24 versus September 24, if that is available readily.
I'm sorry, I do not have it right now. Probably we can offline, we can give that number.
Sure, not a problem. Thank you so much. Those were my questions. Wish you all the best.
Thank you. Thank you very much.
Thank you.
Thank you. Participant who wish to ask question may press star and 1. The next question is from the line of Alicia from Envision Capital. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. 2 questions. One, with respect to the U.S. business, like we highlighted that as we're transitioning from B2B to B2C, it is patient. Are we trying to say that this business will probably flatline or witness some kind of contraction in the near term before it goes back on growth trajectory? And the second part of the question is, are we still on track to do the $100 million revenue guidance by FY27 for the U.S. business?
Yeah. So as we move from B2B to B2C, in fact, it's probably a misnomer to say move from B2B to B2C, because B2B continues to remain. And in fact, with our expansion in capacities, we might even add to it. So B2B will definitely be there. Our focus in the near term will not be diluted away from the B2B at all, right? Over a period of time, and there is no X number of years that it might happen in or anything like that. Over a period of time, over a long term, we expect Caplin Steriles to be a B2C company, just like how Caplin Point is, right? So I certainly don't see any flatlining. In fact, 100% of all the revenue that you see in Caplin Steriles today comes from our B2B business. And in the next 1 to 2 years, I probably will, you will probably see that at still a very high number, as we slowly make progress into B2C. Now, when it comes to our B2C, we are also not going toe-to-toe with the partners that we have, because the partners that we have are very large players, very well-established players, and their areas are the GPO sales and the very large wholesaler sales and things like that, and which are the areas that we are not going to be present in. We are going to be moving away from that and then trying to do direct to hospitals, albeit it might take a little bit longer time to establish, number one. Number 2 question on the number, we feel very confident about the pathway that we are taking in the US. If it happens in FY27 or FY28, it shouldn't matter too much to us, honestly speaking, because we are comfortable with the speed at which we are going. Sterile product manufacturing is one of the most highly critical areas in pharmaceuticals, and there needs to be a certain amount of stabilization. There needs to be very high levels of compliance, etc. So we don't want to stretch ourselves too thin chasing numbers. So a high quality business is much more important. A highly sustainable business is much more important than purely on numbers perspective at this point.
And as we also focus on scaling our B2C business, will the profitability of this business again get impacted in near term and then shoot up again, say a couple of quarters down the line?
There will be expenses, right? I think the largest head that we are looking at right now is the salary. Of course, we do have a 5-member team in the US. It's not a very large team. In case of, I mean, by way of comparing it to the B2B business, I think on consolidation, you will probably not see much impact at all. But profitability indeed will be better than the B2B business once the Caplin Steriles label gets established in the US. Because remember, today, for all the licensing deals that we are doing, we are sharing 50% of the profit with our partners, right? So technically speaking, that should be accruing to us when we start doing it on our own.
Understood. And my second and last question is with respect to our LATAM business, the new initiatives that the chairman highlighted. Will that require any incremental capex over and above what we've highlighted? Because a lot of it seems like we will be sourcing from China, and like you clarified, we'll be doing probably the finishing at our facilities. And by when can we expect, and because these are slightly more complex opportunities, by when will they start crystallizing for us?
Yeah, I would like to actually answer to your query. See, every year, as has been told actually by our CFO, we are in a position of actually retaining a deposit of say close to 300 crores. Sometimes it's slightly higher, sometimes it's almost 300 crores. So the project that we do is not based on actually a debt-driven opportunity or something. It's more of from internal accruals. And it's true that this project which we said, not necessarily that you have to go for all these projects actually from the scratch. There are areas you can go for partnership. This partnership model, which of course helps people as long as we understand it's technically feasible and economically viable. And we need to conduct some market actually studies which we already informed our people to find out the scope for such and such products, which of course will help us eventually. And as far as cash flow is concerned, it is not going to affect our cash flow by getting into these areas which I have discussed during my speech. That is for sure, because we will not be doing all actually at one point of time. You also know it's not that easy to do it also. The priority will be to the one which will strengthen our bottom line, and also that will also add to our cash flow. That's how only we'll look at it.
No,
is there anything else you want to add?
Sorry, please.
Yes, please.
Sir, I know that we are very mindful of cash flows, and we will prioritize our projects. I just want to know, is this going to be capex over and above what we have already highlighted? And also, by when will some of these initiatives start crystallizing for us?
Okay. What we will do is, the next 2 years, we'll concentrate on the projects that we already committed to. Already we have discussed about it also. These things which we are talking more of actually, it will be of like asset light model which we used to have before. Earlier we started with an asset light model for generics. These are all specialty products which we will do it actually like we may not invest in a big way. If necessary, we may invest in clinical trials, or we may invest in actually bio studies, that kind of stuff. And that too, we have a CRO which has been approved by US FDA. We also go for a free hospital, where the hospital volunteers more, and that will also reduce our cost by 40%, because most of the time when people go for hospital volunteer study or clinical study, that increases the cost when you go for a private hospital. So I don't think this is going to cost us in a big way, and we are very aware of it, and we'll go step by step.
So in the near term, next 2 years, our focus will be on the larger markets in LATAM and growing our Caplin Steriles business.
Yeah, it will be focused on completion of all the projects in the form of vertical integration. Most of the companies, bigger companies, are vertically integrated. We will also do that kind of a thing, in the form of completion of all the projects, starting from API formulations of various kinds. And then, as you rightly said, move to actually bigger geographies for registration. The registration will happen not only from our own products, we will also outsource as long as the company actually is approved by US FDA or EU GMP. It can happen from India, it can happen from China, it can happen from another country also, wherever there is an opportunity.
Understood. Great. Thank you, and I'll come back in the queue.
Thank you, ma'am. Thank you very much.
Thank you. Ladies and gentlemen, who wish to ask question may press star and 1. The next question is from the line of Rishabh Shah from Bugle Rock PMS. Please go ahead.
Yeah, I am audible.
Yes.
When entering the US market.
Sorry for
Can you
interrupting.
speak a bit louder, please, Rishabh? We're not able to hear you.
So when entering the US market.
Sorry for interrupting you, sir. Your voice is not clear. Could you speak little loud?
Yeah. So when entering the US market, you would like to cater to smaller players and not competing with the big ones. So what would be the opportunity size and
Yeah. So obviously it depends from product to product, right? But if I were to go by a general rule of thumb, you can assume that the three largest buyers in the US, the group purchasing organizations, they call them the GPOs, control about 60 to 70% of the market. Having said that, if you looked up whatever is the latest shortage list in the US, close to 70-80% of the products are injectables only. Right. So obviously the rule of thumb doesn't give you a very clear picture because we feel, and from whatever that we've, done research so far, we feel that close to 40-50% of the market is not well serviced. Right. So while we talk about establishing direct contact with hospitals and all of that, the only thing we need to ensure is to make sure that the switch happens. Right, it might take a little bit more time because the whole market is very entrenched in the current system that they're operating in. But obviously, pretty much every buyer that we speak to is unhappy with the way the consolidation has happened because they, especially the mid to smaller players, are not getting the right amount of focus. They're not getting the right amount of interest from these larger selling companies. So while it will depend on a product-to-product basis, I would say that there is a meaningful percentage of the market that is outside of these three large companies.
I would like to add one more point here.
Yes, sir.
Like, when you keep your goods next to the customer in the warehouse, it may take some time actually to get the sales started. Once it started, there is no stopping. If you look at actually the latest concept of a country which is going for friend shoring and near shoring, the idea is to keep the goods actually next to the country where there is an opportunity. That clearly shows there are companies which are going for warehousing model. There are also countries going for a kind of warehousing model which is nothing but near shoring and friend shoring. So this goes on to say that what is important is keep the goods next to the customer. If the customer is actually a part of the middle or bottom of the pyramid, one day or other actually they are bound to come. What is important is we have to increase the number of products over a period of time. Once we do that one, automatically the volume and value will come to the company. Then we create the value actually to the customer.
So, just to follow up on that one, so why is that there are underserved hospitals in USA? So why any of the companies have not catered to them when they know there is no competition in that segment of the market?
It's like, go ahead. Yeah, go ahead.
No, go ahead, Chairman. Yes.
Hello? Can I go ahead?
Yeah, please.
The issue is anything that you create in the form of unique has not been created by some other people. That doesn't mean what you have created as unique, is it actually long term or not. It may not be that successful actually in the sense, in the form of short to medium term. But it's bound to happen because whether the country is actually South America, North America, or any part of the world, the most important thing is the supply chain management. When you keep, once again, let me repeat, keep the goods closer to the customer. Why the customer will say no? Of course, it differs because of certain things in the form of actually companies monopolizing. There are companies which are more of monopoly and near monopoly. But how long it can continue? If that be the case, other companies see after US, India is considered as the second actually largest destination for catering actually to the generics in US. Now that if you look at it, all the players who are there in US, they went to US like 22 years ago. We are just, we got the products got registered in 2016. The US FDA first inspection has been completed there. And now that, we have completed 25 ANDA, more and more will go for more and more the products will come. And then, the opportunity also will come to know by getting into the market. In fact, the COO and the other thing also, they are there. Our professionals are there. They have been actually going to the market, understanding the market niche, and we are sure that we will be in a position to make it. That is for sure. We are spending a lot of money and time on this project. Otherwise, we will not do it. to be very honest with you.
Yeah, another way also to look at it is if you draw a parallel to what we are doing in Latin America, right? Many people, when they think about Latin America, they look at Brazil and Mexico, right? Because these are two of the largest markets over there. So if you had the wherewithal at that time, we had the type of projects, we had the type of partnerships over there, then like the Americans call the right bang for your buck is if you want to get to $100 million in Latin America, you go to these two markets. But we took the road less traveled and went to the smaller markets. While it took a little bit longer for us, what we have right now is much, much more sustainable. It's repeatable, measurable, etc. So that is also something similar to the question you asked. Why aren't many people looking at the smaller to mid-size hospitals and healthcare clinics and stuff like that? It's because it takes a little longer to do.
This reminds me one more important factor which I actually forgot to mention. Today, the business in Latin America, the smaller geographies, we are doing very well, mainly because of one factor called stickiness factor. When you cater to the bottom of the pyramid, you can't afford actually costly drugs. If you can give a quality medicine at affordable cost, then your customer becomes your raving fans. Now, what I have found in the last 2.5 years by staying next to the factory, next to CSL, the same way, if you can reduce actually the deviations in the shop floor and reduce the OS in the QC, this is being handled not by the people at the top. It's more of participative management. It has to be bottom up, not top down. Again, you will create a stickiness factor here. The same way one day we will create a stickiness factor in US, that will work. Thank you.
And my last question would be, so you say every time you launch a product, your target is to achieve at least 10 to 15% market share in each product category. So you have been successful in that. And there might be some product categories where you have not achieved that market share.
Can you please talk louder? Not audible, please.
Sir, my question is, you said that every time you launch a product, your target is to achieve at least 10 to 15 market share in each product category. So in some products you might have been successful. And some products you might not have been successful. So what challenges do you face in that?
Did we say that we will achieve 10 to 15% of the market share anytime? Because I don't remember. It's not easily possible everywhere. We also have 10 to 15% of the market share. I don't think any of us would have told you that way.
No, I think you're talking about many years ago when what is our target in the US? I think we would have probably said that 10% market share is a decent way to start with, but that was many years ago, Rishabh. And honestly, the one other thing to take into account is the fact that our entire business in the US today depends on how well our partners do, right? So there are some products where they provide more than 10%. There are some they're close to 20%. There are some where they're only 2 to 3%. So, we're not really in control of how well the partners are doing, right? We can always have conversations with them, etc. But they are going to do what makes best sense for them, which is also one of the driving factors for us to take the bull by the horns and establish our own label over there. When we talk about our own label in the initial periods, we're not going to be aiming at 10 to 15% kind of market shares because this will require us to go down the well-traveled route of using GPO sales, etc. So it will be single digits for us for a period of time until it becomes sustainable, until it becomes sticky. Then we remain very, very hopeful that we can get into double digits in a very sustainable way after that.
Oh, okay. Thank you so much. Thank you.
Mm-hmm.
Thank you. Thank you very much.
Thank you. The next question is from the line of Dikshant from DB Wealth. Please go ahead.
Hello, sir. Hello, team. Congratulations on very good numbers. So I have two questions. First one being on our expansion into the US. So as we are discussing that we are now going to go more from the B2C route and approach the hospitals directly, which will aid our margins. Is this the first step we are taking towards the expansion to the B2B2C business? And is this the route that we are taking, which is also considering that we were thinking of maybe in the future going forward with sort of a CVS pharmacy thought process? I'm just giving CVS as an example, but is this the first step towards that thought process, or is this separate and that is separate?
I'm not fully clear about the question. Are you saying, are we going to be forward integrating into getting into retail on our own? Is that what the question is?
Yes. So a couple of quarters ago, the chairman sir has been talking about that we will be using our reserves maybe in the future, not immediately, for getting the right place to use our capital, and that may be into the retail business. Not certainly immediately, but my assumption is that the first step is to go one step down to directly to hospitals. Is that the thought process? Could you please expand on this?
Yes. Now, I'll give you the answer. It's not a couple of quarters ago, probably a couple of years ago, and you are right, we told you that way. And we have found, that exercise has not been very actually fruitful. We have also started 50-60 pharmacies, to be very honest with you. What you observed is when we went to the bottom of the business pyramid, that's the retail, we found the retailers who used to support us were not in favor of us. They started telling us, please don't do this because that will affect our survival. Hence, we decided not to go ahead with that kind of a retail chain expansion. So we don't have any such ambition in future. No.
We are more interested in the distribution concept, actually, So if we were to invest into something like that in the US or even Latin America, we'd be much more comfortable in the distribution aspect of it, not so much in retail per se.
Okay. So a follow-up to this is, does that mean that then we will be expanding our team size and focusing more on creating a B2B distribution and, probably catering to maybe smaller clients so that we can get similar sort of margin profile, but maybe a little bit more employee cost going forward? Is that the thought process? And the employee cost rising is okay because it will cover up in our operating margins in the years to come.
So we have a fairly lean structure in the US. We have 5 people on board, and we will see how the business picks up. But eventually, I think we will have to grow the teams because our end point is where we want the products to be close to the customers. We're going to be eventually setting up 3 to 4 warehouses of our own in the US in strategic point. So when that happens, I think definitely the team will grow, but it's early stages. We need to learn how to crawl and walk before we can run.
Yes, sir. Yes, sir. All big things start small. So another thing is, Mr. Padipathan, can you give us a broader idea, and nothing specifics required, but just a broader idea of how we are thinking of our reserves being utilized? We currently have 2,500 odd crores plus, but what is it that you're thinking of our reserves right now?
Like as we told you about the new developments in the form of various forms of actually, new business models, new businesses in the form of insulin, biosimilars, getting into specialty chemicals. We may not get into all the areas, but again, currently, the 700 crore which we have committed, that we will be deploying in our projects, it will take 2 years to complete everything, 2.5 years maximum. By the time, we will also be mature enough to get into the areas which is very pertinent to our growth. So the results that we take, that we talk about, can be also useful in future for buying the ANDAs, but also going for acquiring the distribution company, or maybe some other meaningful acquisition. So the money which sits in this thing, okay, I do agree with you, it has to be deployed, but at the same time, it has to be a calculated risk now. So that's why, we will be deploying it, that is for sure. We'll do it actually at the appropriate time.
Mm-hmm. Mm-hmm. Okay. Okay. So last question is on, it's a bit financial question just for bookkeeping purposes, is our cash flow cycle, our debtor days from 2020 has increased, and they have not significantly decreased from that point of time. That our inventory days are still around 180 days plus. So, is there any significant change that we have seen in the last 4 years that is here to stay? This is also affecting our ROC in some ways. So, just a thought process exercise I want to understand, please.
One portion of the answer I will give you, then I'll ask my CFO to give you the answer. One is actually as you increase the sales, you are bound to get into some institutional business, which of course, slightly there will be a delay in payment and all that also contributes to this one. But again, if you don't do that also, what will happen actually, people who actually participate in this type of tenders and the countries where we are operating, these are all smaller countries, they will definitely tell us to involve in the tender, so we have to do. It's not that we are going to actually lose the payment or something. The payment we will get it. Slight delays also is creating this issue. And rest of it actually I'll request my CFO to talk on that.
Yeah. Thank you, Chairman. Let's amplify what Chairman said. Actually, if you see for 2020 is the benchmark we are taking, there's a period when we brought all our channel partners, most of them rather, not all of them, four of them or five of them into our own fold, and then we made them subsidiaries. Prior to that, what was happening was, the moment the goods leave my factory, it is considered sales, and then it is used to be inventory in transit of the customer. Right? Now that we are doing it in terms of our own subsidiaries, the goods are my own goods, either my own goods in the standalone book or in the books of the subsidiary. So that is significantly increased, and as we have been repeatedly saying for the nth time, goods closer to the customer has taken us to this level. Otherwise, we would not have been able to reach this level of scaling up in the last 4 years. If you see, last 4 years, the turnover has more than doubled, which is fairly more than decent growth for any industry of our size. Right? So out of 327 crores, which is a cost, 50% is in the warehouses in these 4 Central American countries, and then 20% is in transit. Our transit time is anywhere between 60 and 75 days, and the clearance, by the time it is available for sales, is 100 days for the market. So this is in my book. So these are, and then the debtors. So it takes that much time to reach the warehouse, and then on they have to sell, and then they have to realize the money. So obviously it will elongate the working capital time, and as you know, we are not stressed for working capital, we are not stressed for funds. We have more than adequate liquid funds, and this is the strategy which we have adopted, which is paying dividends. I think we should live with that. ROCE, as we have said, that this is not the only reason for drop in ROCE. We have been consistently investing. Last 8 years, we see we have done about 720 crores. CSL, where we have done more than 400, 500 crores, we just started breaking even, rather very paltry sum of profits which is started adding to the kitty. And then 150 crores, what we have invested in your Onco lab, will start yielding results in the next 1 to 2 years. So this, we have to have patience and perseverance. Then we will see the fruit in the next 3 years.
Got it. Just directionally, Mr. CFO, the thought process I was referring to is, as we'll be expanding our warehouse also in USA, will there be a trajectory where our inventory days, the number is going to go up, or is it going to stay stable? Just how are we looking at it going forward? I understand that we are changing the way that we are distributing our business. I just want to understand if it's going to further affect our cash flow in any extreme manner or even a slight deviation.
What I told just now applicable to the LATAM business. US, I will ask Mr. Vivek to.
No, I would like to add a few words here. In any warehouse in the initial stages, it's very difficult to predict whether we'll be able to sell everything. whether it is South America or North America. But going forward, when the business picks up, that will actually help the cash flow. That's how only it has happened in the smaller geographies of Central America, that's Latin America. Although we may have little issue in the aircraft, is there in any business for that matter. Overnight, the generics cannot be sold. It has to create the acceptance. People have to understand that the warehouses are in a position to cater to their requirement, because sometimes we also have to understand the market where to create our warehouses. And then even if there is some issue, we'll have to shift actually from that place to another place. The warehouse can be shifted. It's not that it cannot be done that way. It's not a retail business where it is stationary. You can't move from one place to another place. But these issues which you said is all part of business. In any business you will have a slight increase or like 5 days or 6 days or 1 week. It's not going to cost the company. We don't have anything in the form of debt overhang. And as you rightly said, we ourselves said, we have enough cash reserves. So in such a case, I think, this is not going to matter much actually in the long run.
Thank you so much. Thank you so much, King. Thank you so much for the question, sir.
Thank you, sir. Thank you very much.
Thank you. As that was the last question, I would now like to hand the conference over to management for closing comments.
Thank you very much, everyone, for taking time out to attend our earnings call. We look forward to being in touch with you going forward as well. Thank you very much.
Thank you. Thanks to all of you. Thank you very much. Thank you.
Thank you.
On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.